Thank you very much. I will also speak in Greek. Look, what has happened during the last years is that our country and businesses tried to cover this investment bank of the previous 10 years, since 2010, where we invested less than amortizations. That started to reverse in 2022 when investments in fixed assets exceeded the amortizations of the country. And this is important because all these years, what has happened in Greece is not only that we lost productivity, but technological capacity as well. We lagged behind in technology. That started to reverse, especially in 2021 and 2022. Given the fact that a lot of investments were carried out by businesses and they covered lost ground. What led to that direction is that country regained its status of investment country. As an investment country, became bankable, and the cost of lending is quite low, and we had a lot of investors, which meant that there was an opportunity for investors from abroad to come and seize this opportunity. Something else that we saw in the past years was that we became an investment-friendly country, especially for foreign investments. So we had a lot of transactions, private and public ones, and that is why we attracted funds and Greece became more institutional. And you see the way businesses behave. We have institutional behavior, institutionalization, as we call it. The last thing that played an important role was that the banking system managed to keep up with the circumstances because the balance sheets were consolidated. We had liquidity, and the loan investment rates decreased, so we could lend businesses in better terms than in the past. So businesses could also borrow money more competitively. There were some industries that did well, especially in the last 2 to 3 years, and the banking system was very flexible and interested in funding these industries. We had big investments in the last 2-3 years. Macquarie investment in the 49%. You understand that this is the beginning of a consolidation course and improvement of the distribution system, electricity system, and we could have more investments, but that was an important one. Hellinikon project is underway. We have investments in airports and the infrastructures of the country, and we have a series of investments in real estate. And you might be aware that we have a stock of real estate which is old, does not meet requirements said after the pandemic, or the requirements that are linked to energy sustainability and planning. A lot of investments took place there. In the last a decade, we had 40, 50 investments in real estate with 40, 50 millions each investment. So there was a great interest there. In industry and exports, we had a serious effort in order to cover the investment gap of the previous years. Our country took a step forward with exports, and industry helped a lot in that. We started exporting more goods and services. In 2021, exports of goods represented 50% of the total of exports of our country, which is of paramount importance. And I will share with you another figure. In 2021, exports increased by 52% compared to 2010. So there was a leap forward. And at this point, I dare say that a lot of the businesses we visit, and all of us have this experience, are businesses that have focused their turnover up to 100% to exports, something which some years ago was just a dream. All these things happened because there was assistance given to these businesses. They were business-oriented, but banks also helped them. Two sectors were especially assisted. Tourism, in the last 5 years, we have investments of 30 billion in tourism. These were investments that improved the tourist product in our country, because in the last years we increased the number of rooms in 4 or 5-star hotels. In the period 15 to 22, the 4-star rooms increased by 22%, 5-star rooms by 54%. So brand name Greece sells a lot. So private sector and the public sector did a lot in this. And last but not least, we have investments in energy. 1.1 gigawatt is installed in Greece every year in the last 3 years. So we have competitive funds in cost and timelines. The payoff of loans is extended more than the usual timeline we see in Europe, and we have know-how, which helps a lot.